more on oil's recent trickle-down. We're joined by Natalie Joubert, Vice President of Policy at HBW Resources. Natalie, thanks for joining us tonight.
Thank you.
So, Natalie, oil remained below $97 a barrel. Light crude is down nearly 6% over the past month. What are the main reasons we're seeing this decline in oil?
You know, there's two big reasons that we can point to. The first being, since earlier this summer, we've seen kind of a stabilizing effect in the Middle East. The geopolitical tension that we had earlier seen in Syria, Egypt, and Iran, that's now starting to quiet down a bit, so there's a little bit more certainty in the market. But the bigger impact that we're seeing is that there's a larger amount of supply in the market, particularly coming from the United States. U.S. producers have exceeded expectations, and thankfully we have this excess supply at a time when demand is lowering slightly.
So you mentioned this excess supply, and crude oil supplies have increased by over 28 million barrels in the last 6 weeks. What do you attribute this increase to?
There's a few factors. The first is in the United States, refineries are going through a maintenance period, so they have not been consuming as much oil as typical. So that is added to the excess supply. In addition, we've just ended our summer holiday season here in the United States, so people are driving less. But I would anticipate over the coming months, as holiday season begins to wind up for Christmas, we'll probably see consumption continue to rise, and that's also an effect of lower gas prices here in the United States. People will start to consume more, and then supplies will go down as an effect.
Now, Natalie, explain the relationship between the Fed action and oil. Why would the withdrawal of stimulus and a stronger U.S. dollar impact oil prices?
A stronger U.S. dollar impact? Well, the economy is really based on how much oil costs in the United States. With consumers consuming oil for everything, transportation, manufacturing, it really does have an impact on the broader economy.
All right, what about natural gas, the increase in fracking and other alternatives to oil? Has that had a serious impact on oil prices?
Absolutely. We're seeing that the increase in production here in the United States from shale oil and shale gas has had a great effect in stabilizing oil prices. I think a lot of experts would agree that even though it hasn't been able to significantly reduce the price of oil, on the natural gas side, we've seen prices in the United States fall to historic lows. 5-6 years ago, we were looking at highs for natural gas prices. Now we're at such a low that consumers are looking at saving $1,000 a year on their utility bills and power bills.
Now, Natalie, Chinese companies have been investing very heavily in oil companies. So far in 2013, over 20% of oil and gas deals globally have actually involved a Chinese firm. That's according to data provider PLS. What is the impact that China is having on the oil market?
I think China's huge thirst for oil, both as a consumer and as an investor, is really driving demand. We're seeing investments by Chinese firms in the United States and in Canada, and that's helping to drive production. Then on the consumer side, as you had mentioned, the huge ticket in consumption by China is helping to drive demand higher and by effect prices higher as well.
Now, you mentioned Syria. From a geopolitical point of view, is the situation in Syria no longer a major concern on oil markets, the sanctions on Iran's oil exports? What are the big geopolitical factors in play at the moment?
I think they're always going to be a concern. As long as we still have those choke points in the Middle East, particularly the Strait of Hormuz, there's always going to be a market eye on how the Middle East is reacting. I think at the moment we're in a little bit of a quieter period, and that's had a positive effect on the price of oil, but we can never take our eye off the game.
All right, and oil at $97, that's quite a way down from its peak of $147, which was in July of 2008. We're going to have to leave it there, but thank you so much, Natalie Joubert, Vice President of Policy at HBW. Now, our